Hey everyone, I'm Huw Davies. I'm co-founder and CEO of Ozone API, and delighted to be here today for a conversation with Mark from Product Cloud. We're going to be spending a bit of time just talking about the consumer data right in Australia and the evolution of it, particularly at this critical time where we're entering the next phase where non-bank lenders need to move. So Mark, maybe we could start if you just introduce yourself and tell us a bit about Product Cloud.
Thanks, Huw. So I'm Mark Evans. I'm co-founder and CEO of Product Cloud. We've been on this CDR journey since its inception, actually, 2018. So my fellow co-founder, James Bly, he was the lead architect at the DSB, and he led the development of the CDR technical standards. So at that time, we were working in banks, and we saw that life was getting tough for product managers, with all the increased regulation, competition, and we were going through that period where in Australia we had 12 months of rate rises, so then job was a nightmare. So we developed Product Cloud in 2020, really to just be a window for these guys to be able to manage and govern and meet the regulatory requirements, but also in that competitive ecosystem. And we were fortunate that we got to work with some banks in the early days that wanted an opportunity to be more than just compliant. So they saw it as an opportunity to make themselves better banks. So that helped us build out the product to the way it is today. We also included along the way some other regulations in Australia called the Design and Distribution Obligations, Financial Accountability Regime, and now there's another APRA requirement called CPS 230, which is all about making sure your vendors and third-party vendors and fourth-party vendors are not going to do the wrong thing by you. So
thanks, Mark. And yeah, a lot of regulatory acronyms there, but I know we've been working together, Ozone API and Product Cloud, and I think one of the things that brought us together actually was how similar the backgrounds were. Again, we started with, so my fellow co-founders, Chris and Freddie, were the guys that developed and authored the open banking standards in the UK, and we saw how different banks were finding it. So we built our platform to help banks and FIs all around the world deliver their open banking and open finance APIs. And I know when we first met, we were like, "Whoa, this is this is kismet." The stories are very similar, but maybe if
the timeline just a bit of a shift, yeah.
Exactly. But maybe if we just spend a moment on kind of the CDR story today, and you perhaps just bring to life kind of what has been happening over the last few years and where we're we up to.
Yeah, look, I'm going to give you a quote from a colourful Australian Prime Minister in the 1980s who was sort of known for his zingers, and he said, "In the race of life, always back self-interest because at least you know it's trying." And I think there's no shortage of self-interest in the CDR in Australia at the moment. So any appeals to altruism or the public good just don't cut it. So and really, I think everyone's in agreement that for open banking or the CDR in Australia to thrive, the ecosystem's got to be worth everyone's while. So from the banks and their banker associations through to vendors like us and consumer advocates and the tech associations. So we've got to all align. And as you know, Australia took a sector approach. So while we have banking and energy that are now live, we're now moving to the non-bank lenders, which we'll talk about in a little while. No dates yet for telcos, insurance, or wealth, but now that we've just had an election, there'll be the incumbent government's been returned. There will be a new person controlling CDR going forward. The assistant treasurer will be new, so hopefully that will give this a bit of momentum that it's probably fair to say has been lacking the last couple of years leading up to that election. At least both sides of government support this. It's one of the few things that they do agree on. But look, I think it's fair to say that it's under-delivered and not helped by the fact that it's not well known by consumers or the benefits that they're going to get out of it. So that cost of compliance narrative sort of rings loud. But I think there are some seeds of hope. Action initiation, the ability to not just read but write, has been passed, although we don't have any dates for that yet. The new government that was brought in on the weekend has already said that productivity is going to be high on their agenda, and we know that we've seen in other jurisdictions CDR can deliver productivity, and hopefully the high compliance costs, that the banks will start to see some benefits flowing through, and that might give the system a bit of a jolt. But so really, public education and the government simplifying some of the rules around accreditation and perhaps giving the regulators a bit more teeth, because there is some compliance enforcement that could probably be valuable.
Yeah, and there's some sort of common themes we've seen in a few other markets around the world there, actually. I've seen that challenge in a number of places where there's been pushback from the banks because it's positioned as a huge investment. I think both of our companies can make that less of a problem, but it's seen as a huge investment without an obvious immediate payback, and there's been a lot of pushback. We're seeing there are a lot of markets now that are recognizing actually the framework has to encompass commercial models for a sustainable long-term economic ecosystem, and as you say, I think right capability can be a big part of that. So not just about data sharing, but the ability to actually make action happen, whether that's money movement and payment or account opening, and I think we will see much more of a move towards more premium and value-adding APIs in many of the markets, but it can be a long battle, and I know that's been a particularly vocal one in Australia. But we're about to hit a next phase, right, with non-bank lenders coming in.
Non-bank lenders, yeah.
So what's happening there? Who's in scope? What are the timescales? Tell us a bit more about that.
Yeah, so a non-bank lender, if it's what's called the de minimis threshold. So if they have residential loans or finance leases that exceed $1 billion and have more than 1,000 customers, then they're covered. So below that, you're not compelled to comply. But some of the messaging we've been getting out of some of those who just fall below that limit, there may be benefits in doing some or all of the compliance, although it's not mandatory for them. We might talk about that a little bit later. But look, I've seen some estimates. It's often very hard to get the financial information of these non-bank lenders. So, but to see what their size of their books are. But I've seen suggestions around 30 or 40 that might be included in the immediate list, of various sizes. But in terms of the timescales, they pushed out just prior to the election recently, but at least they're locked in. Mid-July 2026 is when the product sharing obligations come into effect, followed by the phased rollout of the consumer data sharing. So that commences early November 2026 for the large non-bank lenders are the ones that are over 10 billion in loans or leases, and they'll start with the simpler products. Then they'll go on to the next tranche. Will be the complex products. Then they move to the smaller mutuals, and then the smaller mutuals complex product. So that runs through till mid-September 2027. So those durations are not dissimilar to what the regulators gave the banks, and the implementation sort of process is similar to what the banks underwent, which from a non-bank lender perspective is not a bad thing, because it means they can leverage the lessons from the banks, and there were a lot of lessons to take away from that.
Yeah, and maybe let's spend a moment on kind of delving into if you're a non-bank lender. So what do you actually need to do? And then I think, yeah, we can explore a little bit some of those lessons you talked about. But then I think there's a really interesting conversation around beyond just compliance. Where are the opportunities? What
Yeah.
But so you're a non-bank lender. You've got a deadline coming. What is it you actually need to do?
Well, you have to develop and maintain your CDR-compliant APIs. So that's where we come in on. You've got to implement robust consent management systems. You've got to put in internal and external dispute resolution processes. So as you can see here, there's a technology side, there's a process side, there's a human resource side, because there's plenty of training, and you have to ensure that data security and privacy, you're not going to violate any of the CDR standards or the current Privacy Act. So they're the sort of main I guess broad activities that have to be followed, and then so you have to develop that infrastructure. Your policies and procedures need to be updated. Your staff need to be trained, and and one of the things that we saw really important with the banks, and particularly James being part of the machine, with the data standards body, is just engaging with the regulators. There are no shortage of forums to share information amongst each other and the regulators, and we found the regulators to be willing to engage and very open with their support. So I think that's a very simple message for the non-bank lenders.
Yeah, and so I agree that, I mean, there's a lot for the non-bank lenders to think through, and again, we're seeing this in many markets. Quite often there's a consideration: should I build it, or should I work with a specialist platform? And there's a lot of complexity to get through. Delivering APIs that meet a standard like CDR sounds relatively trivial if you're a kind of an engineer or a developer, but there's a lot of complexity in this. I mean, we know this. So I mean, firstly, you don't just build it. Yeah, you don't just build it once. The standards continue to change and evolve, and it's not just about data structures. There's complex security protocols. You need to support and be certified to, say, FAPI 2 as an example. And yeah, we support all of the different FAPI versions and variants around the world, and there's a lot of specialist complexity in that. The standards, as I say, continue to change. The most extreme version we've seen in Brazil, there was one point where the standards were changing every 3 weeks, which was just insane. But typically in a lot of markets, you're still seeing maybe 1 or 2 updates a year, and then you've got to go through the whole conformance certification process again. And again, we've been through this a number of times. The CDR conformance certification, there's a bit of an art and a science to sort of getting through that. But then, as you say, yeah, building all of the consent management capabilities, there's a lot of complexity here. I mean, given the timescales and the specialist nature, I mean, we've both set up to take away all of those headaches for financial institutions and make it much easier to focus on the business opportunity and not on building and maintaining these APIs. But as you say, there's all of the operational considerations around it. Then you need the tools to run this as a channel. You need the tools to onboard and manage the third parties. You need to understand the changes in the regulation and when you need to make updates and things. So there's a lot of complexity here. And you mentioned some of the learnings from the initial sort of phase of the banks implementing CDR. What are the biggest ones that jump out for you?
Well, Just touching on the point you mentioned before, I think when the major banks had to go first, there were not a lot of proprietary sort of products they could buy anyway. And I know even Product Cloud, we didn't come onto the market until the second tranche when the second tier and the mutuals came on. So that sort of became our market. But so they probably didn't have much of a choice other than to sort of do a homegrown solution. But there are challenges with that because, as you say, I think we've seen 7 major amendments to the regulations, over the past 5 years, and all the subsets, myriad of things that sit within those. But and even most recently, there was it's what's called Decision 338. So people in the market here would know what that is, and the Australian Banking Association were trying to lobby the government not to do them because they said that it was going to cost banks that had built their own solutions $40 million to upgrade now. And to be fair, these changes, they're mostly around the product data. They're not, we would say they're not complicated changes because we've already built them into Product Cloud. So from our customers' perspective, no issue, no cost. But for some of the banks that have got homegrown solutions, they now have to, get funding to do these changes, pull together teams, hopefully find some people who may have worked on the original build, find a slot for it in their delivery roadmap, and just a nightmare. So I know there are some non-bank lenders who are thinking of doing it themselves. I'm sure people would say, well, of course you're going to tell them they shouldn't. But look, you spoke about FAPI. FAPI's not a problem if you have a good platform. And CTS is a nightmare unless you bring on good vendors who know what they're doing. So that's our advice, but people will make their own decisions. But there's some of the key learnings. I think one of the other key learnings was that some of the mid and smaller banks didn't take the product sharing side as seriously as the customer data sharing side. Now, there's no doubt that the customer data, the data holder solutions are way more complex. So they put a lot of effort into those, even though that was a later milestone. And then they dropped the ball of product and missed the product compliance dates. So that's another message that we're getting out to the non-bank lenders. Because with all the learnings and with the products that are on the market now, you can have the product product up and running now. And if you get started soon, you can have the data holder solution, the authenticated solution, ready to go, tested, and not be feel that pain and stress of working right up until the milestone date.
Yeah, no, I think that's right. And there's I guess one of the consistent learnings we've seen with banks all around the world. So not just Australia, but in many markets is there's a gradual recognition that this is something that's much more and much bigger than a compliance challenge. So, all right, there's a regulatory requirement for non-bank lenders now to implement their CDR APIs, and there's a deadline and there's a challenge to move now to get that done. But fundamentally, this becomes, I think, a really big business opportunity. One of the areas where we've seen open banking around the world have the biggest impacts is in the lending space. All of that access to data, one, helps lenders understand applicants and existing customers better to make better initial decisions, manage the portfolio more effectively. But also, as you mentioned, we're seeing the evolution of these open APIs to go beyond way more than just sort of data and product information sharing, to include right activity, which can help with the repayment of lending and more innovative kind of options for how you set up the initial loan and repayment options, as well as write APIs that enable the onboarding experience and kind of loan change experiences to be embedded in third-party journeys. I think there's a huge opportunity here for non-bank lenders beyond just complying with the regulations. But what do you think? What are you seeing in the market? Is there much conversation around that?
Yeah, look, they play in a very well. A lot of them are quite niche in their product sets. They do either leasing products or personal loans or specific mortgages, or they have very sort of targeted segments. So, which in some respects has driven them to sort of build some, going back to our earlier question, build some of the technology themselves, because it has been sort of quite narrow. And it's not that they haven't done a good job of that, but and maybe that's one of the reasons why some will consider doing it themselves. But look, the people I've spoken to do see, I think, the long game, that this can be, that it's not just regulation. This is a way of getting their products out, particularly with the product reference data. This is a huge opportunity, and why I mentioned before that some of these non-bank lenders who may not hit the threshold, if nothing else, at least consider, putting in meeting the product reference data requirements, because what it means, what we're seeing in the market is that more product data in particular is being consumed via open banking, and particularly like the death knell has been sounded for screen scraping, although the government hasn't come out and said but everyone agrees that its future is limited. So already users of data are relying on open banking or CDR. So you're missing an opportunity here if you're a non-bank lender and you're not maximizing that channel. So and you spoke about non-regulatory use cases for the APIs, and I think that's an opportunity to learn from what's happening in the rest of the world, that we can do better here, and getting yourself a platform that actually allows you to do that for really not much extra cost than what you'd be paying to be compliant. And that's how we're positioning ourselves, the product cloud. We do so much more than just compliance, but you don't pay any more for that. It's almost like you're getting the steak knives and all the other sort of benefits for the price of the compliance.
When again, back to I know this has been more about talking about the market, but back to our partnership, I think that was one of the other things that brought us together, right? I mean, I've been working with banks around the world, including with banks in Australia, to help them deliver their open banking APIs in line with the right standards. As you piece together all of those global standards, there's so much rich capability that can be used to go beyond the specific compliance requirements in each market. And I think that's the beauty here. So, I mean, we've come together, right? So we can combine these two specialist platforms, take away all of the headaches of complying, but also have the tools to turn it into much more of a business channel, right?
Yeah, absolutely. Well, like your global experience, our local experience, the fact that we are highly technical, but we're not just technology platforms. We understand banking. We've all come from sort of banking backgrounds. I think we're very excited about the partnership and what we can offer our customers, because I think it's more than just compliance. And I said right at the beginning that we were lucky to basically stumble across some of our early bank customers who saw this as an opportunity to be a better bank. And I'm hoping to, not just the non-bank lender sector, but we're still pushing hard into the Australian markets, and as open banking moves into new jurisdictions across Southeast Asia, and New Zealand is a market that we're we're very keen on. To work closely with you guys. We see that this partnership is being having something really valuable to offer.
Yeah, I've got, so there we go. We got the partnership pitch in at the end, but Mark, thank you. I think it's been a really interesting conversation around kind of how CDR has evolved. This next stage, there's a lot of work for the non-bank bank lenders to do over the coming months, but then beyond that, because the regulation doesn't stay still and the business opportunity is much more than just compliance. So listen, thank you. Really enjoyed the conversation. And if you are a bank or a non-bank lender in Australia, then Mark and the team are the guys to go to. And obviously we'll very happily get involved and help with any conversations as well. So Mark, a huge thank you.
Thank you for the opportunity for a chat.